Good morning, my name is Brian Johnson. I want to talk to you today about printing money, trading. Anyone can trade and print money and just make trades. Today I want to show you the reason when you take a trade and why you don't take a trade. When you move in to print money and when you don't print money. It's simple. If we took the range at being on this chart, and here's two correlations, an Australian dollar, AU, US dollar, and the US dollar JPY. Usually the US dollar JPY is up, this is down. So it's a good little correlation trade, but we'll talk about that more later. We're looking at a line chart and looking at M's and W's. What is an M and what is a W? It's simple. It's hard for a lot to see, but if you remember that if you have two higher highs and two higher lows, see that's not currently a high or low, you have a W. If it's a low and you have lower highs, then of course it's a M. You're heading here for an M because this low is lower than that. But look, why would you trade? If you're trading price, you buy when the tick goes up and you sell when the tick goes down. But why would you not enter the trade here? If you took that these 2 points were about 48 pips away, and you were here, let's look at and you are following the candles as a sell, you are 103.39, and here you are 103.86. 1039, 103.886. There's only 20 odd pips there. So if it goes only down to the support and breaks the 3 bar, you're virtually on the 3 bar on a sell. You're counting on that when you should be buying near the lowest low and selling on the highest high. Why? Because you're going to pay 10 pips out minimum just in the transaction. So that's changed from 48 to 38 pips. And here you're down the bottom. The maximum you can get on a sell there is a few pips when you take off the 10 pips. Can you see that? When you take off the 10 pips, you're in a no-win trade. You can trade using just the colors, red and white. Red down, white up. In the 3 bar breakout, you identify a range you're currently trading in. But here's the support and resistance. Why would you go short so close to the bottom of the range? Straight away your profit loss is going to be lost for a lot longer time. A lot longer time trading that. You want to trade the buy and think about the distance between here and your candle or your price away from the highest or the lowest. That seems simple, doesn't it? So here we'll look at some points of the trend. Just simply here, the trend is down. If you're putting the on the monthly chart, you'll see the trend is down too. We don't need to even look at the the price is below the LSMA. See it? When the price is above it, it's an uptrend. When the price is below it, it's a downtrend. It hasn't clicked up here in the monthly chart. The price 103.971. Maybe it will continue down to 102.56 over the month, but we're looking now, and we're looking back into the M15 when we're going to print money. So how do we print money? When the price falls down and doesn't tick up, we wait for the tick up for the price to cross the LSMA. When the price ticks up above the blue on the LSMA, we want that to be blue, and we want the price to be above it. We want to have enough room on a buy to make a profit when we take off our brokers' spreads. So trading in this small time frame, we always look at the tick. We take profit as soon as the tick goes down, and we always want to be out when it crosses down and comes back to the support at the maximum. But we're playing scalping, printing money. So the moment the profit goes loss, as it will as soon as you enter the trade, it goes loss, then profit, then loss. The way you play the game is you're playing the broker's spread, and you're just clicking. The moment it makes profit, you want to take the trade fast, quick. Like it's Darth Vader, you're clicking to kill the profit, but you can't kill the loss. You take it only when it goes plus. Click, fast, quick action. It is training you to become profit conscious, not loss conscious. It is training you to make non-stop trades, and simply as soon as it starts to turn, you take the profit. Trading like this, you can do 80, 100, 200 trades a day. But it's teaching you profit trading. Now, what indication and how do you do this? Simply the price. See, this line is a price chart. This is a price now. It's not lagging. It is an actual price chart. When the tick goes up, see that? You buy. When the tick goes down, you sell. Buy, sell. When you hit that as a sell and the trade goes loss, profit, you must click fast. Take the profit. This is training to take profit, non-stop profit. Later you'll be controlling drawdown. But first, the game is a game, shoot the profit. Take profit, print money. Learn to print money, become profit conscious. Too many people are loss conscious. What is your stop loss? The moment you say that, you're losing. You're not thinking what your stop loss is how fast you can hit profit. How fast you can break the broker's spread and take a profit. You have here many indicators. The real true indicator is this. This teaches you the trend. Look at it. Higher highs, lower lows. When this point here was broken, the low was below the previous low. The trend was broken, and that becomes nearly a fractional. It could click back. The point is, when you see this V formation, click long. You can click short. Where is the whole trend heading? Bang, bang, bang. But what you've got to do is make sure that when you take the trade, there is enough room to make a profit. Obviously, when you're getting down near the support, you should be buying, and when you get up near the resistance, you should be selling. Think about it. Down here, you're waiting for an uptick to put a buy. Up here, you're waiting for a downtick to put a sell. Why? Because you've got to take off 10 pips. Why would you trade a short so close to your bottom and your support? So the moment that clicked up and you took it, when you're down in this range here, you're buying, aren't you? Why would you sell with so small a spread, risk reward? It's buying zones, buying above the blue line, and when it gets up here, selling on the yellow. The other things you look for is what is the current volume. Of course the sell volume is here, but look how far you've got between the support and resistance. People talk about reward risk. This has a high risk when you have not much room to go. You're always looking for maximum room up because you're trading in a small time frame with plus minus very small pips. So it's price action now, no thought. Simple. You have higher highs, higher lows, it's an uptrend. When you have lower highs, lower lows, it's a downtrend. Lower lows, lower highs, lower lows, it's a downtrend. Higher highs, higher lows, it's an uptrend. So how do you define an M and a W? A W is simply higher highs, higher lows. Higher highs, higher lows to there. Then what does it become when you have a lower low? It starts to become a downtrend, doesn't it? Think about it. A fraction of those points. Trading is easy. Trading and learning how to make a profit is a full-time job. Training to hit a profit and become profit conscious. That is what game mode is. Game mode is trading, teaching you first to become profit conscious. Teaching you not to be feared of loss is be frightened not to take the profit. Everyone says that's simple, but believe me, once you learn that first lesson, you're on the way to becoming a great trader. But to become a great trader, you then have to learn how to manage drawdown. Anyone can trade and make money if they understand the basic principles of trade. There's no right or wrong way to trade. But trading is simple. Don't make it too difficult. First, learn to take profit. If you can't take profit on every trade, then you are not trading. You're just becoming a loss loser, non-stop loss trader. You'll win a few, you'll lose some, but anyone can take a profit. Just think of some of the rules that you need to make a profit. You need enough money left on the table to trade and take a profit. You need enough room to go to the top and the bottom. Why would you trade short here when your reward risk is higher going the other way? Think about it. Just my opinion from Brian. Remember, there is no right or wrong way to trade, only how you think. Think profit. Trade, demo, practice, non-stop demo. Think of it as a game, in a game mode. Play, demo, until you are 100% certain you really know how to make a profit on every trade. I've given you one way. There's thousands and thousands of ways to trade. With all the methods on the Forex forum, the one method that's not taught is how to take a profit and how to manage drawdown. This is lesson 1, and I have discussed it in all my videos on managing drawdown. But here is a basic of game mode. Take a profit. +1, -2, +3, -2. When do you hit? When it's in profit. Once you understand that, you're on the way to trading as a great trader. Practice, practice, practice. I practice every day when I'm not trading live. To hone your skills like a great athlete, one must know how to take a profit. It's harder than you think because you think it's hard. How you think, how you act, how you react. No thought, act. See the tick? You're going to make enough money? Take it. Bang! See the tick down when you're up high? Take it. Bang! You just look at the tick. Up, long, down, short. Have I got enough room between that and that to make a profit? If I haven't, don't take the trade. Okay, that's all for now from Brian. God bless.